Hello, good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala, along with me, Snehi Shahzad. Saying a very good morning to you as well. Happy Friday as well.
Happy Friday indeed, Vinny.
Happy Friday for us. Markets, I want to know, is that going to be a happy Friday as well? It's been a bit subdued in the last couple of trading sessions. What is that handover that we're getting from the US markets? Surely an important one to watch out for as well.
Absolutely, Vinny. We're not getting much of a positive handover coming in from the US. So let me take you through what the global markets have done in trade overnight as well as for the course of the week that went by. And let's start looking at the US markets. Now, stock futures for the US markets were flat in overnight trading on Thursday as the market is poised to end the week with steep losses. The overnight action followed a 3-day losing streak for all three stock averages as investors reacted to a signal from the Fed that it intended to keep interest rates higher for longer. These lofty levels could put pressure on risk assets like equities. Now let's take a look at what all three indices have done over the course of the week. The S&P 500 is down 2.7%, NASDAQ down 3.5% this week respectively, on track for their worst week since March and the third negative week coming for both of these indices in a row as well. Now the blue chip Dow has dipped 1.6% in the meantime, so also on course for losses over the week, and bond yields surged after the central bank forecast one more rate hike for 2023. Now, the benchmark 10-year Treasury yield popped 15 basis points to hit a high of that 4.498% level, which is its highest level since 2007. Meanwhile, the 2-year rate up 5.2%, touching its highest since the year 2006. Important data also coming in from the U.S. U.S. jobless claims have fallen to their lowest in the last 8 months. And of course, we'll be talking more about this in the show as well. And another big piece of data that's coming in, the U.S. current account deficit has narrowed sharply in the second quarter as surpluses on services and primary income offset a shortfall on goods and data. All of this is based on data that came in yesterday. So this was the handover coming in from the American markets. Over the course of the week, sharp cuts coming in for all three indices. But let's shift focus and talk about Europe then. And European markets closed lower amid a raft of interest rate decisions from central banks in England, Turkey, Sweden, Switzerland and Norway. Lots of central bank action happening everywhere in Europe. The Pan-European Stock 600 index ended with a downtick of 1.3% with major bosses and almost all sectors in the negative territory. Travel and leisure stocks saw the biggest drop, down by 3.2%, followed by mining stocks, which shed 2.6%. Now, FTSE was also down 0.7%, and the big news coming is the Bank of England paused its hiking cycle, keeping the policy rate at that 5.25% mark after cooler than expected inflation data. Now, the Swedish and Norwegian central banks have both opted to hike interest rates, while the Swiss National Bank has paused its hiking cycle. So, lots of central bank action coming in from Europe as well. Largely mixed, rather weak handover coming in globally, Vinny. But while this was on the equities front, Vinny, take us through what crude and other commodities have done.
Absolutely, weak handover came in there. Oil prices, they seem to be at least settling down a bit. Not much of a sharp move either on the upside or the downside is what we're seeing coming in. Look at the Brent crude oil prices as of now also trading around that $93 per barrel mark. WTI crude oil below, just slightly below that $90 per barrel mark as well. It's at $89.9 per barrel mark as of now. Now, obviously, a bit of a settlement that is coming in there on this front. Now, oil prices, yes, slight bit of a rise is what we coming in this morning because it's up 0.2% in today morning's trade. But obviously that is mainly because what everyone is looking past is those tighter supply concerns that has actually helped market look past that concern. And this is over the rising interest rates that were also a bit of a concern there. Yesterday also we were seeing a bit of a wobbly move coming in for crude prices as well. Now crude prices, yes, nonetheless, when you look at it for the week, seems like they're still going to be ending on the negative note given that fears of that higher interest rate is still persisting, right, after the FOMC meet. People still know that there may be a hike. Maybe right now there was a pause, but there could be a hike going forward as well. So that is one concern of higher interest rates that's still there, and it is, especially in this developed world, surpassed the heavy dose of that profit taking. So that is one concern that comes in there. So let's keep an eye out on the crude oil prices. When you look at what actually gold prices are also doing this morning, gold is at around 19,000, $1,943 per ounce mark, 0.20% uptick there. So keeping an eye out on gold as well as oil prices, both a bit stable as of now. Oil seeing a slight bit of an uptick this morning, Snehi.
Absolutely, Winnie. Let's see how that pans out for our markets and for oil prices going on in the future. But let's also take a look at all the important global cues that you should be keeping on your radar, as well as domestic cues, which we'll talk about later. But first, beginning with global cues, then you've got a bunch of data coming in today. US, UK, Eurozone, S&P global manufacturing numbers will be coming today. Composite PMI's numbers will be coming today, so keep an eye out for that. That's your focus to back home. And in the primary markets, now lots of action happening over there as well. It's the last day to subscribe to the SciSilks IPO today, as well as the Signature Global IPO today is the last day to subscribe to that as well. And you've got a new IPO opening today from the 22nd of September, which is today, to the 26th. You've got Manoj Vaibhav Gems IPO, which will be opening for subscription. And in terms of other events in general news, you've got Chandrayaan 3, which will reconnect with ISRO today. So keep an eye out on all of these events happening today.
Absolutely, and one more thing that we should also watch out for, Snehi, is going to be in terms of Shami Hotel, the IPO that's going to be listing today as well.
Absolutely.
So that is
miss out on that one, maybe, but yes, a
so
big
let's
one
keep
over
an
there
eye
as well.
out on that one. We do take a lot of trips, and this has good brands coming in as well in terms of the Hyatt, Marriott. So
yes.
that's a one to watch out for as well, and that's on the domestic front. But important data point that came in from the US in terms of the U.S. Jobless schemes, where application for unemployment benefits have actually fallen to their lowest levels in 8 months last week, pointing to a persistent labor market tightness even as the job market is cooling. Now, U.S. jobless claims have fallen by 201,000, and the report from the Labor Department also showed an unemployment rolls in the early September, were smallest since the month of January.
And the Bank of England has decided to maintain its key interest rate at 5.25%, marking a pause in a series of 14 consecutive rate hikes. The decision comes after a surprise slowdown in UK inflation. This is in line with the recent move by the US Fed Reserve to pause its own rate hikes.
And the Central Bank of Turkey has now hiked the key interest rates to 30%, which is a 500 basis point jump from 25%. Now, this comes in after Ankara continues to battle double-digit inflation. On the back of this news, the lira witnessed a slight weakness against the dollar. Meanwhile, when you look at the Swiss National Bank, ended its streak of 5 consecutive rate hikes, keeping the interest rate unchanged at 1.75%.
And shifting gears to geopolitics now, US President Joe Biden welcomed the embattled leader Volodymyr Zelensky at the White House as Zelensky seeks to shore up additional support for his war-torn country. During their meeting, Biden referred to Ukraine as a partner and said he was working with other G7 allies to formalize a commitment to the country's long-term security.
And Rupert Murdoch will be stepping down as the chairman of the board of both Fox Corp as well as News Corp, and this is regarded as the father. He's regarded as the father of modern tabloid. Rupert Murdoch will exit both the roles in November and will be appointed as the chairman emeritus. Now, his son Lachlan will now be the sole executive in charge of the media empire.
And India-Canada relations have hit a new nadir. India has cancelled visa services for Canadians, and Canada staff in India is also set to be trimmed. And in an unusually strong statement, India's external affairs spokesperson Arindam Bakshi taunted Canada, saying it must worry about its reputation as a safe haven for terrorists. Listen in to that excerpt.
If there is any country, if you're talking about reputational issues and reputational damage, if there's any country that needs to look at this, I think it is Canada and its growing reputation as a place, as a safe haven for terrorists, for extremists, and for organized crime. And I think that's a country that needs to worry about its international reputation. You are aware of the security threats being faced by our High Commission and consulates in Canada. This has disrupted their normal functioning. Accordingly, our High Commission and consulates are temporarily unable to process visa applications. We will be reviewing the situation on a regular basis. The issue is not about travel to India. The question is not about travel to India. Those who have valid visas, those who have other kind of documents like OCIs are free to travel to India. But the issue is of incitement to violence, the inaction by the Canadian authorities, and a creation of an environment that disrupts of our High Commission and consulates. That's what's making us stop temporarily this issuance of visas or providing visa services.
Consular authorities or consular officials cannot really conduct all the business. So that is why we are stepping back on that. But of course, I think it can also be taken in terms of tactically to push back against Canada, because, this is what Justin Trudeau has done is totally uncalled for. Meaning if the investigation had been completed and there were some results, some people had been arrested, there was some clinching evidence, then one could have thought, okay, it is, he's going to the parliament and he's announcing to the whole world. Now he's talking about credible allegations. Frankly, I don't understand how an allegation can be credible. It is a contradiction in terms. An allegation is something that, an individual thinks. How can it be credible if a friend of Mr. Justin Trudeau tells him that this is what he thinks is right? Does that attain credibility?
Okay, that was a lot of global news, a bit of on the domestic front as well that you all got in. But don't go anywhere because we're going to slip into a short break. But after the break, we'll go more domestic, we'll go more stock specific. So please be prepared and we'll come after the short break.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Now let's take a look at how the Asian markets have opened up this morning, and well, lots of red coming in for the Asian markets this morning. They have fallen ahead of Bank of Japan's rate decision, which investors will be closely watching to determine if the central bank will make any change to its ultra easy monetary policy. Now, a poll of Reuters economists showed that economists all across expect the Bank of Japan to hold its benchmark policy rate at that negative 0.1%. On opening, Japan's Nikkei had fallen 1.1%. Let's see where it is right now, still down almost 1% in trade. Let's also take a look at other indices when it comes to the Asian markets, and you've got ASX 200 on your screens. That's Australia's index. It shed 1.4% on opening, still down 1%. So, well, sharp cuts coming in there as well. Let's take stock of South Korea's Kospi down 0.4%. It is, not as down as its counterparts, but still, sharply in the red. Followed by that, Hang Seng down 0.1%, not doing much, rather flat performance coming in from Hang Seng. And let's also take a look at Shanghai. Shanghai, very flat moves coming in from Shanghai, not doing anything absolutely in trade as we speak. And let's take stock of GIFT Nifty. GIFT Nifty at 19,672 compared to our 19,742 close yesterday, indicating a rather muted start and a muted day of trade for us, Winnie.
Absolutely, a muted day of trade is what it's looking like for the Indian markets. But let's just get in an update. What is coming in on MotoGP's intro? The stage is actually set, and the bikers are all geared up as well, quite literally, because India is all set to witness the adrenaline pump and bone-chilling action as it is set to host the first ever MotoGP event. And the high-octane event will be taking place at the Budh International Circuit in Greater Noida, Uttar Pradesh. And this is going to be from 22nd of September, that's today, till 24th of September. MotoGP 2023 is the biggest motorsports event to be organized at BIC after the 3 Formula 1 race were held in the venue between 2011 and 2013. What's in store and who should you be looking forward to? Let's go across to my colleague Karishma, who's here with a detail on that. Karishma?
All eyes at the Budh International Circuit as we get ready for India's first ever MotoGP race, MotoGP Bharat. You can hear the sounds right here at the Budh International Circuit from where I am reporting. This is, of course, the paddock area, and you can see all the teams are preparing, whether it's the Muni VR46 racing team, whether we talk about Ducati, whether we talk about Honda. All the preparations are currently ongoing at the Budh International Circuit. It is going to be a heavy duty weekend, Friday, Saturday, Sunday. Saturday, of course, qualifiers are happening. Sunday is going to be the main race day. What we're given to understand is that there are 22 riders in total from across the world, including reigning world champion Francesco Opecco, as he's called. Second in line, Martin is also here. There is going to be one Indian Indian rider as well. MotoGP, of course, being the main race. Then there is going to be Moto2 and Moto3 race as well. So this is going to be a very, very exciting weekend at the Budh International Circuit. It does have a capacity of over 1 lakh. It will be interesting to see how many fans, spectators turn out for this particular event, MotoGP Bharat. Like I said, it is important to emphasize that this is the first time that an event of this magnitude is happening in India. So it is, of course, going to be a very exciting race to watch out for.
Well, absolutely, Karishma. India's first MotoGP sporting event, a big event to watch out for. We will watch out for this one happening today, and all eyes will be on this event. With that, let's also take stock of all the important market voices and managements that we have lined up for you on the market. Starting at 9:20, we will be joined by Ashish Gupta, who's the CIO at Axis Mutual Fund, and he will be joining us to talk about where he's seeing positivity in the markets, the sectors that he's currently liking, and the themes that he's positive on. Followed by that, at 9:30, Jairam Sampath of Keynes Technology will join us, and he will be talking about the recent rally that we have been seeing in those EMS stocks. At 9:50 a.m., we will be joined by Dr. Feridun Fisharaki, founder and chairman of FGE. Take note that this is a mega ET Now exclusive, and he will be talking about all the movement that we've been seeing in the crude prices. Followed by that, at 10:05, we have Nitya Balasubramaniam of Sanford Bernstein, and they'll be joining us to talk about all the pharma deals in focus and all the action that we've been seeing in the pharma space lately. So keep an eye out for all of these market voices as well as managements joining us today. With that, it's time to slip into the news segment for the hearing in bed. ET Now Newsbreak confirmed on July 20th. ET Now told you that Glenmark Pharmaceuticals, which is controlled by Saldana family, is looking to divest stake in its unit Glenmark Life Sciences, and now it's official. The company today said it would sell 75% stake in the unit for Nirma for rupees 615 per share, which is lower than the last closing price of 627.10 paise. The deal values the company at rupees 705.35 crore. Talking about the deal, Glenmark CMD Glenn Saldana said that the deal helps both companies achieve long-term goals. Let's listen in to an excerpt of what he had to say.
The purpose of doing this transaction was purely because of divergent business models, right? I mean, GPL going in a different direction, right, which is more to move up the value chain and develop a branded business, and GLS going into scaling APIs and developing a CDMO model. So divergent business models is what drove us to look at this transaction, right? So that's the first point. The second point is, clearly if you look at, the way forward, a strategic partner is always preferable, right? Because they bring a lot of stability, they bring a lot of growth. Their outlook is more to grow the business as opposed to squeeze out costs, right? And it's much more longer term, right? So strategic partners are always preferable. They take a long-term view on the business. They are growth-oriented. They are, employee-oriented. So always preferable compared to private equity, right? I mean, that's just our view. So from that perspective, Nirma was a perfect fit, right, for this transaction, right?
Well, let's also go across to my colleagues Shrishti and Anurag to understand the contours of this deal and what this means for Glenmark going ahead.
Well, yes, the deal is finally through, where Nirma has gone ahead to buy 75% stake in Glenmark Life Sciences at an equity valuation of 7,535 crores. And finally, Glenmark Pharma has come in out of Glenmark Life Sciences, but they'll continue to hold around 7.8% stake into the company. This is definitely a positive for Glenmark Pharma. Why so? Because the company says that going ahead with all the money, that around 5,651 crores they will be receiving, they're going to be utilizing that money to pay off their debt, and post this transaction, their balance sheet will actually be net cash positive. Other than that, the key to note is the valuation, because this deal has come in at a valuation of 3.5 times EV by sales. We are taking this matrix because of the fact that Glenmark Life Sciences margins have been quite higher, and in comparison to this, if we see other pharma API companies' valuations, then that has actually been lower. So quite an attractive valuation. 11 times is what the EV by EBITDA valuation is stacking up. And if we talk about some of the other internals, then 615 rupees a piece is the share price that has been decided. So Nirma will go ahead with an open offer to seal this particular deal. Now, when it comes to guidance by the company, then Glenmark Life Sciences have already guided for a growth of in the mid-teens growth and a stable EBITDA margin for FY24. They already have CAPEX plans, and in the new promoter, if we see their experience in the pharma space, so they also have a group healthcare subsidiary named AccuLife Healthcare, and recently they've got to acquire another pharma company named Stericon Pharma. So they have been looking to expand in the healthcare space, and Glenmark Life Sciences is the latest addition to their portfolio, and definitely a big one.
Conglomerate Nirma has bought a 75% equity stake in Glenmark Life Sciences from Glenmark Pharmaceuticals for a value of about 5,600 crore rupees. The deal was done at an equity valuation of about 7,500 crore rupees at 615 rupees per share. Now, Nirma will make an open offer to all the public shareholders of Glenmark Life Sciences. Speaking to reporters after the deal was announced, Glenn Saldana, who is the chairman of Glenmark Pharmaceuticals, said that one of the key reasons for diverting the stake was the divergent business models of GLS and Glenmark Pharmaceuticals, and the US generics market where Glenmark Life Sciences competes has become a super competitive market now. Now, to give you a short timeline of the transaction, about 6 months back, Glenmark Pharmaceuticals had started looking out for a buyer for Glenmark Life Sciences, and it was in July that the race to acquire GLS narrowed down to 3 contenders, which were Nirma, PAG, and Chris Capital. PAG was via one of its companies which it backs, Sekhmet Pharma Ventures, and Nirma has emerged as a winner for in the transaction.
Thank you so much for that. But let's shift focus and talk about the update and slew of announcements that have actually come in from the Sebi in terms of a board meeting that they had. The Sebi had given a go-ahead to provide flexibility to large corporates and to meet their financing needs from the debt market. Let's go across to my colleague Ankur Mishra, who's here to give us more details on this board meet. What are the latest updates coming in from the Sebi? Ankur, take it away.
Yes, Sebi board has given clear breather to large corporates as far as investment in corporate debt securities is concerned. Remember, here at ET Now we had reported that there might be relaxation in the norms as far as investment in corporate debt securities is concerned, and so far the norm is that you have to maintain 25% incremental debt borrowing in corporate debt securities, and if at all that is not maintained, there was a levy of penalty of 0.2%. Now, new norms, as far as the new norms are concerned, Sebi has said that a higher monetary threshold has been specified, and it has been defined for large corporates, and hence the number of large corporates are likely to come down. Apart from that, the removal of penalty on large corporates has happened, and therefore they will be able to raise that incremental borrowing. If at all that that threshold is breached, there will be no penalty. Instead, there will be incentive and a moderate disincentive to the large corporates, and hence that 0.2% penalty will go away on large corporates. So it will be breather for large corporates on borrowing through corporate debt security, and also those who are complying to norms will get some form of incentives, although the details of this circular will be specified later. Apart from that, there has also been announcement on investor protection fund on REITs and InvITs. Remember, there was a similar kind of announcement which was made on IPF on on the unclaimed account, which was lying in escrow account for more than 7 years. And similar proposal has been approved for REITs and InvITs. Apart from that, there is also a relaxation as far as the new norms on compliance of investment advisor is concerned. The earlier deadline was the 30th December 2023. Now the breather has been given for 2 years for compliance of such norms.
Well, thanks, Ankur, so much for taking us through that. And let's shift focus to aviation then, because crisis hit Akasa Air is planning to offer joining bonuses as high as 12 lakh rupees to attract new pilots after losing nearly 40 pilots to rival airlines in recent months. Akasa, that recently hiked pilots' salaries by up to 40%, has dragged these pilots to court, wanting them to serve the mandatory notice period ranging from 6 months to 1 year. ET Now's Sumit Chaturvedi joins in with more details. Sumit, take it away.
It's clearly a war to retain talent, and that's why Akasa is now doling out bonus. We hear that the bonus can be as high as 12 lakh rupees per annum. Overall situation is not very good with Akasa Airline. Its 40 pilots have quit. They've been dragged to court by the airline. But it wants to retain talent. It wants to retain pilots. That's why the bonus is being offered. Already it gave a salary hike recently. In aviation world, now it's overall, we can see that fight to get as many as pilots as possible, because Indigo and Air India, they have ordered 1,000 planes. So it's time for pilots to be attracted by the airlines. So that's why Akasa is now adapting all techniques so that these pilots can be retained and new ones can be attracted by these bonuses and retain them. And they are being given seniority also, some of them, even before they come to be that senior. So these are something of retention when it comes to retaining these pilots. So that's what is interesting about this overall development at Akasa Airlines.
Thank you so much for that, Sumit. But, staying with the Akasa story, growth plans of the domestic carrier have actually been impacted because of the shortage of pilots. Now, in the forefront, their market share that has declined significantly. Let's go across to my colleague Samir Dikshit, who is here to give us more input on that and perspective on this front as well. Samir?
Budget carrier Akasa Air is going through a tough time, and this is all because that a significant number of pilots of the airline, they have jumped off the airline and most probably have joined the rival airline. And if we go by the market share, this clearly reflects as well. As per the data available by the DGCA, the aviation regulator, the market share of Akasa Air for the month of August was just around 4.2%, whereas for the month of July, it was 5.1%. So a slippage in the market share was clearly visible, and this is all because that numbers have been constantly decreasing. The flight operations has also been shrinking. Not just this, the internal memo released by Akasa Air to its employees, it has been mentioned clearly that they are going to shrink, they are going to reduce the flight operations or rationalize the network operations so as to ensure a reliable operations in the short-term period. But what we are getting to know from our sources that Akasa Air is reducing the flight or shrinking the flights on those sectors which are economically not viable or less patronage is there, less passenger load factor is there. Whereas on the important commercial sector, Akasa Air is trying to fully deploy its capacity. As of now, the market share slippage is clearly visible, and Akasa Air is going through a legal battle, not just in Bombay High Court but also in Delhi High Court. Akasa Air is constantly appealing to the court that the court should come up with a directive, with a stay order that will help the pilot to serve the 6-month notice period. But the market share slippage is not for the month of August. It is very likely that it will continue for next couple of months, because now Akasa is focusing on two parts. First is to ensure reliable operations, and also now Akasa Air is focusing on to start international operations before the end of this year. And for the same, the airline has received the international scheduled operator designation from the Ministry of Civil Aviation.
Thank you so much for that, Samir. But let's move on and shift focus to India, because we will know that it's actually coming from JP Morgan, where JP Morgan, what it's highlighting and it's saying is that India is to be added to the government bond index in the EM Global series. So now that's a very important update coming in, because that means India will be added to that emerging bond market index of theirs, which means this could bring a lot of inflows, foreign inflows in our national and nation's debt market as well. Now, this is going to be happening, and this will be included. India will be included from June 28th, 2024. It's expected to reach a maximum weightage of 10%, and there are 23 Indian government bonds actually eligible for this index as well. Now, combined notional value of these bonds, when you look at it, it's at around $330 billion, and inclusion is also going to be happening not at one shot, but it's going to be happening over a period of 10-month period as well. So let's keep an eye out on this one. This is a staggered manner inclusion that's happening in the government bond index EM Global Series, and India is becoming a part of that. So that's very big for Indian markets. So keeping an eye out on that one, Snehi, today.
Absolutely, Winnie. But on that note, let's slip into a very short break. On the other side, we'll look at all the important stocks that you need to be keeping on your radar this Friday morning. So stay tuned.
Welcome back, and you're watching Market Cafe on ET. Now let's get more domestic, and let's talk in terms of ICICI Bank and as well as BSE as well. Now let's look at these two management meets that were covered by Investec, and ICICI Bank and BSE have some key updates that have come in. Let's go to Sharad, who's here to give us those key highlights that have happened here. Sharad?
Well, yes, important development coming in, and focus we are having ICICI Bank. They have stated that the NIMs are expected to normalize, and the range is expected to be around 4.2 to 4.3% over the next 3 odd quarters. Also, they have stated that the growth momentum still remains strong, and they should sustain at almost 18% growth line when it comes to the headline numbers, and a 20% trend growth when it comes to the domestic business. But however, there was a cautious stance, especially because of higher fees, OPEX and lower credit costs, which could actually soften the blow. But overall, the asset quality trends, they expected to remain more benign, and they are expected to actually protect the overall return on assets at almost 2% overall range. Now, BSE also is in focus, and importantly, they have stated that strong traction is coming in when it comes to the equity options volumes, especially from the month of June itself. For the Friday market share, the expiry day market share, that is coming in at roughly 30%. And currently, they are at a break-even level when it comes to the options. Now, the transaction charges also on Sensex, our options are actually minimal, coming at roughly 50 rupees per million of a premium turnover as compared with NSEs, which ranges between 250 to 300 rupees. And the focus would be actually there to create more customer stickiness and consistency when it comes to the volumes. Lastly, they have also stated that the market share is likely to increase and revenue growth would be there. And they're looking to replicate this with the BankX expiry, which happens on Monday itself.
Thanks so much for taking us through that. But we've got big updates coming in on Wipro, because Wipro has appointed Aparna Iyer as its new Chief Financial Officer. Aparna's immediate appointment follows the departure of Jatin Dalal, the former CFO, who is pursuing other career opportunities. Now, Aparna is a seasoned leader with 20 years of experience at Wipro itself. She will report directly to CEO Thierry Delaporte and joins the Wipro Executive Board. Aparna's appointment marks a crucial moment in Wipro's ongoing transformation journey towards sustainable growth and value creation for stakeholders.
Absolutely, but let's move on and also talk about eClerx as well as Jyoti Labs. Both of these met with some of the analysts as well, MK. And now MK has given some key takeaways. For eClerx, they're saying they expect that the management spoke about improving demand trends versus Q1. They may deliver Q4 revenues in the ongoing quarter as well. And some of the clients with specific are seeing some specific challenges, but surely keeping an eye on this one in terms of the new MD and CEO. Kapil Jain's transition currently underway. Margins are expected to remain below the 28% to 32% range in the target for FY24. Jyoti Labs, in terms of the key takeaways that have come in from Motilal Oswal, they met with Jyoti Labs management. They are highlighting in terms of the plans to actually expand the personal care category. Rising commodity crude prices, that is something maybe could hurt in the second half of the year as well. They're aiming a double-digit growth in FY24, keeping an eye out of that one. And they expect the operating margins target to be in the 15 to 16% range. Let's keep an eye out on that. Rural may grow in the upcoming years is the key highlight that is coming from Jyoti Labs as well this morning, Snehi. Surely important updates that we're seeing, coming in from both these managements as well.
Absolutely, Vinny. So, eClerx and Jyoti Lab, two stocks that will be on our radar as well as investors' radar. But with that, I'm afraid we're all out of time on this edition of Market Cafe. Wishing you a very happy Friday and a happy weekend ahead. Goodbye. As we bid you goodbye, you don't go anywhere because the market will take all the action ahead.